Forget everything you've been told about interest rate cuts. Behind closed doors on Wall Street, the narrative just completely shattered. Right now, oil has exploded past $106 a barrel. A critical global shipping choke point remains aggressively blockaded, and the Federal Reserve is quietly preparing for the one thing no one saw coming: a sudden interest rate hike. What you are looking at is the compounding effect of a worst-case geopolitical scenario colliding directly with an unstable domestic economy. For the last several months, the mainstream financial media has been telling you that inflation was cooling down, that the economy was heading for a soft landing, and that your borrowing costs were finally going to get cheaper. But over the last 24 hours, a series of compounding flashpoints just changed the game entirely. In this video, we are pulling back the curtain on the real data. We're going to look at the escalating crisis in the Strait of Hormuz, the aggressive new ultimatum issued directly from the White House, and the terrifying reality of the CME FedWatch tool, which shows investors are dumping bonds in an overnight panic. If you have money in the stock market, if you're looking to buy a home, or if you're simply trying to survive the rising cost of living, you cannot afford to miss a single second of this breakdown.
To understand how we got here, we have to look exactly where 1/5 of the world's seaborne oil supply passes every single day: the Strait of Hormuz. This maritime choke point has been heavily restricted following the explosive military engagements that began earlier this year. Shipping firms have completely suspended operations, creating the most severe disruption to global energy supplies since the 1970s oil crisis. Look at the numbers. Light sweet crude oil futures for June just rocketed up by over 4.4% in a single session, settling firmly near the $106 a barrel threshold. According to the Asian Development Bank's chief economist, Albert Park, this isn't a temporary spike. Energy markets are actively bracing for prices to remain severely elevated for the rest of the year. But just when the markets thought the tension couldn't get any tighter, Washington threw a massive wrench into the gears. Hours ago, President Donald Trump went live in an interview, issuing an absolute ultimatum to Tehran. He declared that the United States will force open the Strait of Hormuz and made it explicitly clear the U.S. will absolutely not tolerate Iran acquiring nuclear weapons. Trump slammed the ongoing negotiation, alleging that agreements with Tehran are consistently ignored. While defensive planners are watching the military implication, Wall Street is focusing entirely on the economic fallout. When oil stays above $100 a barrel, it acts as a massive regressive tax on the global economy. It drives up the cost of manufacture, spikes aviation fuel, and increases the cost of transporting literally every single item you buy at the grocery store. And that brings us to the most dangerous part of this unfolding crisis, the part that directly impacts your bank account. For months, the Federal Reserve kept interest rates steady between 3.5% and 3.75%. Jerome Powell spent his final meetings trying to balance persistent inflation with immense political pressure to cut rates. But Powell is officially gone. The leadership baton is passing to Kevin Warsh, and Warsh is walking directly into a burning building. Look at the underlying economic data that just leaked out. The Federal Reserve Bank of Cleveland's inflation nowcasting models show that second quarter CPI is accelerating at a quarterly annualized rate of nearly 6.9%. Let that sink in. With energy prices skyrocketing due to the Hormuz blockade, inflation isn't dying, it is accelerating, and the bond market just reacted with sheer terror. Interest rate futures fell off a cliff on Friday. Investors realized that the Fed's hands are completely tied. If energy costs keep pushing core inflation higher, the Fed cannot cut rates. In fact, they may have to do the unthinkable. According to the latest CME FedWatch data, the probability of a 25 basis point interest rate hike by the turn of the year has surged to a staggering 60%. A rate hike as early as December is now officially a coin toss.
So what does this mean for you, the average American investor? If this rate hike scare materializes, the shockwaves will rip through every single sector of the economy. First, look at the housing market. Mortgage rates, which track long-term treasury yields, are going to stay locked at painful multi-year highs. The dream of refinancing out of a 7% mortgage anytime soon? Gone. Second, look at the stock market. Wall Street has been riding a historic bull run, with the S&P 500 recently hitting the historic 7,500 milestone and the Dow crossing 50,000. But that entire rally was built on the assumption that the cost of capital would get cheaper. If Kevin Warsh and the Fed are forced to raise rates to fight energy-driven inflation, that expensive tech stock valuation model completely breaks down. High interest rates make bonds more attractive, pulling massive liquidity directly out of equities. Third, your daily purchasing power is taking a double hit. You are paying more at the gas pump because of the maritime crisis, while simultaneously paying higher interest on your credit card debt, auto loans, and variable personal lines of credit. The global energy supply chain is broken. The White House is threatening military intervention to fix it, and the central bank is getting ready to squeeze the economy even harder to prevent hyperinflation. We are entering a highly volatile economic paradigm. The old playbook of expecting the Federal Reserve to step in and save the market with cheap money is officially dead. The next few weeks will be entirely critical as the maritime deadlock tests the limits of global trade and the patience of the United States military police. Position your portfolio carefully, watch the energy sector closely, and prepare for a higher for longer rate environment. If you want to stay ahead of these rapidly moving market shifts and get daily unbiased breakdowns of how global events affect your money, hit that subscribe button right now for daily U.S. finance updates. Leave a comment below with where you think oil prices are heading next. Thank you for watching, and we will see you in the next